And the reason why it's so popular is instead of just, the 5% down, you actually get up to 10% or $20,000 in down payment assistance with this program.
Hey y'all, Katie here with Team Evo AZ. Thank you so much for following us and listening to our podcast. Here is season 3, and we are super excited for this season. As you know, we are based in the Phoenix, Arizona area, servicing buyers and sellers throughout the valley. But what you might not have known is we are expanding nationwide. So if you know of anyone that might be looking to get into the real estate business or needs to buy or sell a property, but it is not in Arizona, we can still help. Please feel free to message us and enjoy the show. Hey everyone, it's Katie and
Matt.
And we are back with R.E.A.L with Matt and Katie, and that's R.E.A.L, which stands for Real Estate and Life, where we talk about a little bit about life and a lot about real estate. We are a married couple, yay, yes, and we are based in the Phoenix, Arizona area and have been working in real estate together for, I don't know, the last 9 years or so, 9, something like that. I don't know, getting up there.
Too many to remember.
Right. And as you know, if you have followed us, we do a monthly market update for the Phoenix, Arizona area. And we always have the wonderful Ryan Gilliam with Waterstone Mortgage on with us each month. Hello, Ryan.
Welcome, Ryan.
Hello. Thanks for having me again.
Absolutely.
Was that my talk show voice? Are you making fun of me?
Kind of a little bit. Yeah.
Have you been, Ryan?
Doing great. Can't believe the first quarter of the year is over already.
Right.
Unbelievable.
Right?
Really unbelievable. I was just thinking that. I'm like, oh my gosh, it's April. It's April Fool's Day today.
Yeah. No pranks for you guys today. Sorry.
I think after 2020, no one is in the mood for an April
For pranks.
Fool. I think we're skipping this year. I don't think anyone's doing it. Yeah.
2020 was April Fool's, in other words.
Gotcha.
That was. We're good for the whole year.
Yeah.
Seriously. Oh my gosh. So how has your month been? Still crazy busy?
We have been. Yeah. It's been really busy. Purchases, a lot of clients getting pre-approved right now, of course, having trouble getting offers accepted with how hot the market is right now. So, over the past year, really what's been keeping us even more busy are the refinances with rates hitting historic lows. So we have seen that it's slowing down a little bit, new refinance applications, because since, January, we have seen a little bit of an uptick in interest rates. They were averaging maybe about a 2.75 in December. And then right now they're probably averaging about a 3.25. Still historic lows, but it is a little bit of an increase. And a lot of people were predicting it could drop a little bit before increasing. But what it's looking like right now, from what we're hearing on all the predictors, is that with inflation going to be heating up probably in May and June, we might see a little bit of an uptick in rates, a little bit more. Mm-hmm. And a lot of that, the reason why, the stimulus that has been rolled out for the past year, we just had another one. And of course, we have the new plan that was actually rolled out for the infrastructure. And, they're going to be spending some money on rebuilding America's infrastructure too. So that's more money out there. So the more money that's out there, the level of how much your dollar is worth goes down and inflation goes up, and that's bad for interest rates. So that's really why they feel like rates will be going up maybe a little bit more in May and June. But they do feel, now that the economy is opening back up, vaccines are heating up, they do feel like towards the end of the year, rates will probably drop back down again. So if you feel like you might have, missed the boat a little bit of getting the all-time lows, they do feel like we could maybe revisit that kind of towards the end of the year.
Well, that's good news because, as you know, interest rate plays a huge part in affordability. We've been talking about this for the last couple of months, with our network and with our clients and whatnot, because we hear oftentimes, oh yeah, that's really great. The interest rates are low. Cool. I'm waiting for the prices to drop.
Yeah.
Okay, well, have you done the math recently? Because honestly, if prices drop, and they can even drop relatively significantly, but if those interest rates go up a point and a half, 2 points, then all of a sudden you're actually finding yourself
paying more, and now, you know, paying more in interest, right? And paying more for the same property.
Yeah.
Yeah, it does. And I know you had a great chart, if you wanted to bring that up to kind of to show.
My chart.
Yeah, no, we talked about this before the call, and this is a great chart that really shows how much of a difference the interest rate will make on your monthly payment. So even if you know, prices do drop, which it's not looking like they will, based off of where we're at right now with the inventory that's out there, the level of demand, the amount of millennials that are hitting the market, you know, we don't see prices dropping. But yeah, and this great slide here from Keeping Current Matters, it does show the $300,000 at the 2.75, which I kind of mentioned that we were around that range in December. And yeah, so your payment would be $1,225. So even if you found a house like in the 270 range and rates did increase all the way to a 3.75, your payment would actually still be higher because of that 1% increase in the interest rate, even though you are buying a house $30,000 cheaper. So what do you say, Katie and Matt? Based off of this, it's not a good idea to wait for prices to drop, even though they most likely won't. If rates do increase, it's better to buy the house now than wait.
Yeah, absolutely. And I think that's a lot of people kind of focus on the big numbers that are more digestible. So when they look at little small interest rate changes, it's really not as effective to their brain as looking at the difference of $30,000 on a purchase price.
Exactly.
But where a lot of people are kind of disconnected is this: are you buying a home or are you buying an investment? And, you know, nowadays, a lot of people kind of mix those two together, but it's really, really important to kind of remember that your home is an investment, but you shouldn't look at it like an investment. Because if you're looking at it focusing on this dollar amount, but you plan on being in your home for 20 plus years, even 10 plus years, that acquisition price shouldn't be your hyper focus. It should be the interest rate, because that's going to actually have the biggest results in your investment if that's how you're looking at your home.
That's exactly
it's going to go up and down. We've seen it. It's going to go all over. Probably in the next decade or two, we're going to see them go up, go down, all the way which way. So but what's not going to change is that fixed rate you lock in really low.
Exactly.
Yeah. You know, unless they drop and we could refinance, and hopefully they do. You know, the predictions aren't always correct, but after maybe a slight uptick in May and June, you know, just with inflation cooling off and of course the economy opening back up, they do feel like things will maybe get a little bit better.
I would actually love it. I think that having rates go up a little bit would actually maybe have people, you know, put their brakes on, remove some emotion from the scenario, and kind of really reassess what their goals are. In the meantime, that allows inventory to kind of trickle back up, kind of people to kind of be put in reality, a little bit of a reality check. And it just might be really good for our market in general.
Could be a great thing. Yeah, I agree.
And speaking of prices probably not going down, I pulled up another slide here because, you know me, slide lady. And just to put it into perspective, I know we've been doing this each month, but it's such important information for people to really realize what's going on out there and the law of supply and demand. And, you know, that's really, once we have a lot more supply than we have demand, is when these prices are going to start going down. And at this point, we have 2,500, this is last night, okay? 2,504 single family homes in all of Maricopa and Pinal County. All of it. From zero, or okay, you can't buy anything for zero, but from $1, okay, to $1 trillion.
Where's the dollar properties?
Well, but I mean, you catch my drift.
Totally.
You know what I mean? So 2,500 homes is what we're working with right now. And even at like 16,000 homes, that's still not a super saturated market for us.
No.
I mean, so we're well below what we're used to working with here.
Yeah. And what do you think? Do you see anything changing? Do you see any inventory opening back up? I know we talked about maybe interest rates could impact that.
The inventory comes on and it goes off just as quickly. I mean,
Yeah.
we're listing properties that are on the shelf for a hot minute and they're off the shelf the next day. Over the weekend, we were on vacation in Lake Havasu, but I had just listed a property on Thursday and I listed it for $425. And by Saturday night, I had 8 offers all the way up to $458.
Wow.
Yeah.
Waiving appraisals. I
Yeah.
mean, just this, that, and the other thing. To show you, so 2,500 homes are on the market. Here's what is pending. So your UCB under contract, accepting backups, or under contract contingent, or pending. This is what's pending.
Mhm.
So properties are coming onto the market.
They are.
We're just staying at this level of availability that is well below anything we've ever honestly dealt with in our careers. I mean, I've never been at below 3,000 homes before.
Yeah. And one of the things too, when you look at all this data, this is just talking about resale homes. This isn't including new builds. And when you really look at what's happening with new builds, and they even say that that is the amount of new builds that are being chambered and being built, and the fact that the city and state is now auctioning off land to these developers, and they have this pretty robust 2-year plan that's being chambered. They're saying that could give some relief to resale, especially in those areas in the outlying sections that are going to be closer to these new build tracks, because people are going to say, well, is it worth playing this game to compete with these resales when we could have some patience and just get in line for a new build that will be completed in 2 years? It's really, really interesting.
New builds are super interesting, actually, and we watch them for many reasons. And Matt had said at our team meeting last week to start taking notice when the new builders stop paying real estate agents to take their buyers to the new build communities.
Yeah.
Guess what happened this week?
The next day. Yeah.
Lennar is no longer incentivizing real estate agents for doing multiple properties. They would incentivize you to bring multiple clients to their communities. They're no longer doing that. There are some builders that are straight not even paying co-broke.
And correct me if I'm wrong, didn't Eastmark make that announcement that they're not paying a co-broke?
It's Lennar at Eastmark, I believe.
That's
you called that, man.
Yeah, it's one of them. Off the top of my head, I know Lennar is one of them that has issue, but there's another one. You're exactly right. And so that's when you know.
So, but there's a lot of confidence. There's some of the news that I was reading and getting ready and prepared for our weekly agent meeting. And it's just what we try to look at is what's really happening in Arizona, what's happening in, in our community as far as things economically. And one of the funny things, not funny, it's really cool, is Phoenix is now part of the top luxury global market. So they're now identified as a hotspot when it comes to luxury, which is awesome. You would have figured so when you're just driving through the valley over the last 20 years. And when you head up into areas like Paradise Valley and Scottsdale, and you see how many $1 million homes exist, but now it's just at a whole new level.
So Arizona Foothills Magazine, I have been submitting a blog to them for 10 years now. And the blog that I submit is a weekly blog, and it's just basically reporting on the top 10 home sales, highest price home sales in the Valley. And they publish it through the magazine or on their website, whatever they do with it. And I have been blown away, and I've been telling Matt every week, oh my gosh, the top 10 is nothing's under 3 million. Nothing's under 4 million. We're selling 4, 5, 6, 7, 8, 9, $10 million properties now on a weekly basis. Whereas before, for X amount of years in a row, if I had a $7 million on my list, I'd be like, oh my gosh, Matt. Yeah. Everything else was like onesie twosie, like 2 million and under, or even under $1 million. Yeah. I have not had anything under $1 million on my list in I don't know how long.
Yeah. So I guess the good side of that means that there's confidence. There's a lot of high earners that are deciding to move here. And usually when they move here, that means their company's moving here. We're seeing that, that exodus from California. And, the big question is, how long is it going to last? And they cited in this, how long is it before we actually catch up close enough to California and these hotspots that these people are relocating from to say it's not really worth the move. The good side of that is we can say it's definitely going to be longer than a year. So I think things are going to contribute to that. The other last thing that's really interesting is Intel's big news last week about their $20 billion investment into in the Chandler area into 2 factories. You couple
Amazing.
that with the Taiwanese semiconductor, that's insane. And now they're saying that Arizona's primed to be the national semiconductor hub, which is huge. That's a labor pool that's highly experienced, which means high wages, which is just going to attract all these other companies that are going to want to just kind of feed off the byproduct of what these big companies are bringing.
Exactly.
That's huge. That's so much insulation to our economy. And the economist that was talking about this just said this is kind of the precursor to the next 2 years of Arizona skyrocketing. I don't want to say that easily, but like at the same time, it's pretty exciting.
It's super exciting.
And Kate, you mentioned on your listing from over the weekend, actually, how you had, appraisal waivers and things like that. Would you be able to address that? Because I have had that question from a few clients about what that means. Because I know we talked to Gabe on the other podcast, the prior one to this, about appraisal waivers. So there's 2 types, right? And there's one where you could actually waive the appraisal contingency. Would you be able to kind of describe what that means?
Yeah, absolutely. So there are 3 contingencies, or what I like to call safety nets, in our purchase contract, right? Our purchase contracts are really written to protect the buyer. And one of those contingencies is the appraisal contingency. And that simply means that if there is an appraisal required by a lender, and it comes in less than the agreed upon purchase price, well, that gives the buyer an opportunity to either renegotiate with the seller or walk away from the deal. At this point, we're finding that buyers are becoming more successful in obtaining properties by waiving that contingency entirely. So whether their lender requires it or not, doesn't matter. They can get the appraisal all day long, but it's not going to be a contingency in that particular purchase contract.
That really helps you get more competitive, obviously, with your offer, which people are needing to do nowadays.
Yeah, because we're going so far over list price, and sellers are very nervous about that. Sellers, you try to explain to your seller what the market conditions are and how things are going, and we do work with appraisers and put certain things into place to ensure to the best of our ability that that we appraise, but it doesn't always work out, especially if it's $100,000 over the list price. It might just be too far. So sellers are really feeling comfortable with that.
Yeah, they are. And you're noticing it from the buyer's stance as well, because a lot of buyers that are purchasing this market are heavily qualified. They do have a lot of cash to put down. So when they start looking at the fact that they're going to put maybe 20%, or they end up saying, maybe we do a 10% loan and keep that other 10% just for a possibility of having to pay for some appraisal overage, just in case it underappraises. Right. And in the worst case scenario, as a buyer, you lose your earnest deposit. Yeah. And I think a lot of buyers have actually now realized in this competitive market, there's some risk associated with reward, and they're now justifying risking their earnest money and pretty much saying, 1% of the purchase price. If something happens, we're willing to take this risk to get this property. And that's what it is, which also says a lot of confidence about the buying pool.
It really does. And then we're also seeing buyers that are saying, okay, Mr. Seller, if we don't appraise, we'll come to the table with 10,000, 15,000, 20,000 to make up any difference in that. And then, 9 times out of 10, that requires a bit of negotiation from the seller, because it may or may not make up the entire difference, right? But we are seeing a lot of that too. So buyers are just throwing lots of cash at sellers, to be honest.
Yeah. And just to kind of circle back with our last podcast, for those who didn't listen, we were talking about appraisal waivers, which is different than waiving the appraisal contingency. And appraisal waivers is when basically we're running it through underwriting when we're actually trying to get a client qualified for refinance or purchase, and that the underwriters and Fannie Mae basically agree with the estimated value that we have for the house, and they don't require an appraisal at all, which is kind of a win-win for everybody, because a low appraisal can kind of throw things off. Like you were saying, you might have to bring money to the table, extra money to make it work, to make up the difference. So appraisal waivers, we're getting those more and more now. And that's a great way of kind of negotiating as well, where you could say, hey, we don't even need an appraisal on this home. So that's one less thing to worry about. So that's something else you can really add to your bargaining power.
Absolutely. It's been great. And there's a lot of buyers, like we said, that are in the marketplace that have a lot of money right now.
Yeah.
They're dealing with lots of cash. Maybe they sold in another state and they, like we have buyers from California, one in particular, love them to death. They've lived here for a couple of months now. They sold their 900 square foot house in the Bay Area for like 750,000 and moved here to a 3,500 square foot house and bought it for 600. So you know what I mean? Like that's happening a lot too.
Yeah, absolutely.
So
great. I know I get a lot of questions about that because I guess there's confusion about what the appraisal waiver and waiving the appraisal contingency. So thanks for addressing that.
Yeah, absolutely. And thanks for bringing it up. You had shared with us right before we hopped on about a program that's kind of coming back. Do you want to talk about that a bit? Because I think that's really interesting.
Yeah, pretty exciting. It's I know in past podcasts we talked about the grant programs that are available. There's two main ones called the Home in 5 and Home Plus that give you really up to 5% for help with down payment assistance. And those programs, they've been around for a while and they're perpetually getting funded, so they're not really going anywhere. But there is a program out there that has been it's been around twice before in the past 10 years. And it's so popular that it runs out of money pretty fast that it doesn't really get perpetually funded. It's called Pathway to Purchase. And the reason why it's so popular is instead of just, the 5% down, you actually get up to 10% or $20,000 in down payment assistance with this program. And you could put as little as 5% down. It's a conventional loan. And you could use that other 5% for closing costs or, even going over the bidding price. So it's going to be very interesting to have this program, especially in this kind of a market where you could actually free up some cash to help out, to get more competitive on your offers. So there are a lot of restrictions with the program, though. One of it is financial. They want to make sure that you don't make more than $62,000 a year for the people who are actually on the loan. The minimum FICO score is 640, and they want you to be at what's called 45% debt to income ratio, which is a little bit lower, but that's typically where they want you to be. So again, it's a second mortgage really is what they do, that they put it behind the first mortgage, and you don't have to pay interest on it. So the $20,000 just sits there. And as long as you live in the home for 5 years before refinancing it or selling it, you don't have to pay any of that money back.
Nice.
So it's incredible. Like I said, it's been around before, but it looks like it's only going to be available for the next 3 months. So I'm glad we did this podcast because it was just announced it's going to be available for April, May, and June. And basically what they said is going to be $2 million available each month. Wow. And when that runs out, basically they'll have to stop locks and we'll have to wait for the next month for it to be replenished. But last time we had the program, it does go by pretty quick. And besides the income restrictions and the credit score, there are boundary restrictions too. There's only certain areas that do qualify for it. So Katie, I know I sent you the list so we could bring that up to show you what areas do qualify for this great program. So they do actually have some locations in Phoenix, and it shows you the zip codes there. I think, what is that? That's 5 different zip codes in Phoenix that qualify. Yeah. So the one in Glendale. Really the most popular area that used a lot of the funds last time was Tucson, because a lot of Tucson does qualify. But so we also have Yuma, Casa Grande, Sierra Vista's on that list too, Bullhead, Green Valley. So those are the areas that do qualify. And so if anybody is interested, again, you could get up to $20,000 in down payment assistance with this program.
That sounds awesome. And I remember that program. I remember it being extremely popular. Why is it coming back? Has it just been replenished, or is there another reason?
Yeah, it's been replenished actually. And they do it, that they put a bill into place and they vote on it. And they usually agree depending on how things are going with the market. And they did feel, because they're targeting people in like the 62,000 or less income range that could be struggling to find an affordable house right now. So they're really targeting those people in those areas that you could find the house in the price range that you qualify for and get the down payment assistance help. So they're really targeting those people that do need that extra assistance in this crazy market that we're seeing right now.
I think that's great, because a lot of times I talk with people who don't have a whole wad of cash in their pocket and they just figure, well, home ownership just isn't for me.
Yeah.
Yep.
And so it's nice to know that there are some other, resources, some other options for these people to help them be more competitive, because it's frustrating when you only have X amount and you're dealing with people with a whole bunch of cash, or investors that have, big wallets. Like it's frustrating for the first timer, or frustrating for that small family, or, that older person that just needs a place for themselves and doesn't need anything fancy kind of thing,
Mm-hmm.
So
yeah, and having the 20,000 for down payment, closing costs, going over asking price, that's a pretty big weapon to have. So, yeah, if anybody's looking in those areas and interested in the program, call me anytime.
Awesome. Well, thank you, Ryan. All right,
Thank
gentlemen,
you.
do you have anything else to add?
No, I would probably say that in order to see that list, where could you find that for, if anyone's interested in taking advantage of this and finding out what those zip codes are? Where do they go?
I can link it.
Okay.
Oh yeah, great. Thank you, Katie. Otherwise, you could call me and I could send you over the list. It's you have to have kind of a login and password to get into the Pathway to Purchase program. And that's where I basically got that information. But yeah, if Katie, you could share it, or if you ever want to reach out to me directly, I'm happy to share that with anybody who wants to have it.
Beautiful. Well, thank you, Ryan.
Thank you.
Thank you so much. It's been a wonderful chat as always.
As always.
Time flies. Q1's done. 2020's done. What the heck is next? This is crazy.
Oh my goodness. All right, everybody. If you are interested in being a guest on the show, please follow us at Team Evo AZ. That is our handle on Facebook. That's our handle on Instagram, on YouTube.
Life.
That's our handle, man. And so if you give us a like, please, while you're there, and send us a message to let us know who you are and what you'd like to talk about on the show.
Yeah.
Because we are looking for some new guests. So there's that. And then lastly, if everybody would please like us, follow us, download our podcast on iTunes, Google Podcast, whatever platform it is that you enjoy listening to podcasts on. It really helps us out. Download the episodes, so then that way we get a little bit more popular and the real news gets out to the real people.
Bam. Couldn't have said it any better.
In my talk show voice.
Yeah.
All right, guys.
We'll
See you next month.
Thank you. Thanks, everyone.
Bye.
Bye.